Information overload. One of the biggest problems in the modern investing world is excessive information flow. Today, investors receive real-time price notifications, watch constant analysis videos, see countless opinions on social media, are exposed to expert forecasts. This overload strains the brain's decision-making system. In psychology, this is called decision fatigue. Too much data, more thinking, more doubt, stronger urge to act, more mistakes. As information increases, clarity does not necessarily increase. In many cases, uncertainty increases instead. Product and instrument variety. There are hundreds of investment vehicles in the financial world. Stocks, mutual funds, ETFs, bonds, derivatives, crypto assets. As the number of choices increases, decisions become harder. In psychology, this is known as the paradox of choice. More options do not mean better decisions. Instead, they often lead to procrastination, indecision, constant strategy changes, behavioral finance, driven complexity. Investors are often not fully rational. The following biases amplify complexity. Overconfidence. Investors believe they have figured out the market and constantly change strategies. Loss aversion. During downturns, panic overrides the plan. FOMO, fear of missing out. The fear of missing rising assets increases confusion. Herd behavior. Imitating others disrupts a structured investment plan. These behaviors transform a simple strategy into a constantly shifting system. Media and social media influence. Today, investing is heavily shaped by news headlines, YouTube analysis, Twitter commentary, Telegram groups. Media prefers dramatic headlines. A crash is coming. This stock will explode. Last chance. This language keeps investors in a constant state of alert. Constant alarm, constant action, constant complexity. Media and social media influence. Today, investing is heavily shaped by news headlines, YouTube analysis, Twitter commentary, Telegram groups. Media prefers dramatic headlines. A crash is coming. This stock will explode. Last chance. This language keeps investors in a constant state of alert. Constant alarm, constant action, constant complexity. Lack of strategic clarity. The root cause of complexity is often simple. The investment plan was never clearly defined. If these questions are not clear, confusion is inevitable. What is my goal? What is my time horizon? What is my risk tolerance? Why did I buy this asset? Without a clear investment thesis, every price movement shakes the plan. Short-term versus long-term conflict. Some investors claim to be long-term investors while checking daily prices, reacting to short-term fluctuations. This contradiction creates mental conflict. Long-term goals plus short-term reactions equals strategic chaos. Illusion of control. The human mind equates action with control. Trading feels like control. Doing nothing feels passive. This perception pushes investors into unnecessary interventions and disrupts the system. The complexity bias. Some investors believe the more complex the strategy, the smarter it is. However, research suggests that as individual investors build more complex systems, performance often declines. Complexity leads to higher monitoring burden, greater probability of mistakes, increased costs, economic uncertainty and macro noise, interest rate decisions, inflation data, geopolitical risks, central bank announcements. These factors push investors to constantly create new scenarios. Each new data point, new interpretation, new position change, more complexity. How does complexity develop? A simple plan is created. Price movements are closely monitored. Social media influence begins. A new strategy is tested. Another asset is added. The portfolio expands. Tracking becomes harder. Emotional decisions increase. The original plan disappears. At this stage, investing is no longer systematic. It becomes reactive behavior. Conclusion. In investing, complexity usually does not originate from the market, but from the investor's mind. Complexity arises from Information overload. Unclear goals. Emotional reactions. The constant urge to act. A simple system reduces complexity because it reduces the number of decisions, minimizes emotional mistakes, makes monitoring easier, builds discipline,